I feel like Warren Buffett, I wouldn't call it...
I just want all of the money.
All right, good news, guys. I'm only down $2,000 this week. So that is progress right there. Whether we want to admit it or not, we're in the middle of a bear market. Things are a lot different than they were 3-4 weeks ago. And even the great Oracle of Omaha, Warren Buffett himself, has had to change his investing style. On Friday, CNBC had announced that Warren Buffett had drastically cut his stake in both Delta Airlines and Southwest Airlines. His airline portfolio in Berkshire Hathaway has actually dropped about $5 billion, which is a pretty big number. Usually at this point of time, as an investor, you have two options. You can either buy back in if you think the market has discounted or mispriced a stock, or you can choose to reduce your exposure. On Friday, it was announced, it looks like he cut about $390 million worth of Delta Airline exposure, essentially cutting 1/5 of his exposure. And he reduced his Southwest Airline exposure by 4%. The key thing I wanted to make aware to everyone is he actually needed to disclose this very early in the process. 2 days actually is how quickly he disclosed this. He made the trades last Wednesday and Thursday, and the disclosure came in by Friday. And that's because he owned over 10% of each company. Otherwise, he could have waited about 45 days for us to figure out what was actually happening. But because of his massive stake within the company, yeah, we know about it very quickly. Beyond all that though, his total exposure is now below 10% in each company. So we're kind of in a black box. We don't know if this was just a one-time sale or if he's going to continue to sell. He sold just enough for him not to actually have to continue to file reports. At least he has a much longer grace window. He doesn't have to let the public know within 2 days, or the SEC know within 2 days. And for all we know, he's got a window now where, you know, this could have been a strategy. Basically reduce my exposure just enough so I don't completely spook the market if I were to liquidate everything, and then just basically slowly sell off my airline stocks completely. Personally, I don't think that's a bad approach. I'm definitely not stepping in to buy airlines. I don't find any value. I'm not betting against Warren Buffett. And I think if you are to bet against this man, you are completely crazy. I'm watching some YouTube videos of other people doing investing channels. Both the YouTubers and the commentators are oftentimes quoting Warren Buffett saying, hey, be greedy when other people are fearful and be fearful when other people are greedy, which is a famous Warren Buffett quote. They're trying to apply it to the airline stocks and Carnival Cruise. Truth be told, he does it with good, solid businesses that have a good chance of surviving. Airline stocks look like complete shit right now. I wouldn't actually look at any of the other airlines other than Delta. Delta is definitely the best performing one. Here's just one tip. In a competitive industry in the middle of a recession, always only focus on the best name. Let's really put this into perspective. You're thinking about gambling on Delta because you think the price is down, but look at it. It's down from $58. A company that's going to potentially have no business in the future, or for the foreseeable future, or heavily reduced business. I don't think they're really down enough to justify the risk. And this, why would anyone buy this right now? Why? I get that it was at $51.90 recently. It's down to $8, but they have no business right now. None. There's a reason the stock is sold off. It's not panic. It is not panic. They legitimately have a business that could be on the brink of collapse. Warren Buffett is a very smart investor. It's not like he logs into an E-Trade account like myself and his information comes from CNBC. What I'm trying to say is, I think his network is very sophisticated and he knows something. I took a flight from Las Vegas to Philadelphia recently. I paid $180 for a big front seat on Spirit Airlines. It's a very low margin business with an enormous amount of capital. Airplanes are not cheap. You have to buy them, you have to use debt to buy them, you have to use debt to pay for workers, and eventually the cash starts coming in. That's why I never liked airlines. Airlines have had a history of going bankrupt, heavy debt loads, capital intensive, low margin businesses that require a lot of volume. I avoid airlines. I'd rather, if you need to get some money into the market, buy some good blue chip names. If If you look at a name like Google, hey, this is down about a third. Google makes money in a way that doesn't require you to leave the house. Let's take a look at Apple. Look at this. I mean, really, you're gonna give up Apple and buy an airline stock that may or may not be in business? It was at 320. It's down essentially by a third. If you want another one that seems to have a good dividend yield, is this DAL chemical company. Personally, I'm not buying this one, just full disclosure. And full disclosure, Jim Cramer recommended this one, which usually is a contrarian indicator. If you want a beta name, one that I'm adding again, one that I had sold off at a very good price at $86 a share, is Square. Look, it was at $83. It's a gamblier name. It's got half the value, but I don't think it's going to be directly affected by the pandemic. If you want to gamble, this is probably a better gamble than an airline stock right now, if you have the heart. But lastly, just look at a name like Disney. Disney is greatly affected by the pandemic. Their parks are closing. Disney Shanghai is actually reopening, so that might be a good entry point into Disney. You know, it was at 151 as of recently, and it's down to 93. It was as low as $85. I think it can potentially get lower, but I would rather focus on a blue chip investment like Disney. This was a golden opportunity for those people who did get in on Microsoft. McDonald's is not at the worst price either at this point in time. Personally, I don't think in a recession you want to gamble. You want to pick up good names, good businesses at good values. You want to keep your gambling on in a bull market where a rising tide will lift all boats. If you want to gamble on some blue chip names that have been hit hard. Those are the names I'd be looking at right here. They're safe names. They're not gonna be declaring bankruptcy anytime soon. Their businesses can still potentially thrive. Maybe not Disney's, but those other businesses can still potentially thrive in the middle of a pandemic. So if you know someone sitting on a metric ton of Carnival Cruise losses, here's my advice. Sell it and take the tax loss. If you feel inclined that you really need to own Carnival Cruise, wait 30 days, wait for the wash sale rules to pass by, and then go ahead and buy it and see where you stand in 5 years. I don't think it's gonna go anywhere anytime soon. Might as well take the tax loss. Good luck.
Just want all